Hi Varun, good evening. Let's wait for others to join. We will start the class at 7 p. So Varun, I request you to download CA final transfer pricing chart module. We will do some 2 3 that it. How is your revision going on, Varun? Is it going on well? So there is another one. Good evening. Not know your name, but your profile name is here as Sir, taxation of trust and DTWA running now. See, if I upload all these running notes in Telegram group, there is a bit of confusion because lot many PDFs are. So what am I doing? There is my website na www.phoenixbyuma.com. In my website, there is one source called free resources, one tab. Under that free resources tab, I am creating one folder. In that folder, I will upload all the running notes which I taught you for live revision. Give me 1 day time. My team is working on it. They will upload all the running notes at one place. So the idea is if all running notes are available at one place, it will be easy for access. So it's 7 p.m. Shall we start? So I welcome you all for this beautiful concept, transfer pricing. It's very interesting topic. In examination also, it is very important. Easily you can expect 8 to 10 marks from this chapter. So I request you all to listen revision series of transfer pricing very interestingly and with very focusedly. Okay. First of all, charging section for transfer pricing is section 92. What section 92 says? First of all, section 92 says that there should be transaction between two associated enterprises. Only when there is transaction between two associated enterprises, then only transfer pricing provisions are applicable. So when transfer pricing provisions are applicable, first condition, like there should be transaction between two or more associated enterprises. Then only transfer pricing provisions are applicable. Sir, what do you mean by associated enterprise? It is given in section 92A. I will discuss with you. When transfer pricing provisions are applicable, whenever there is a transaction between two or more associated enterprises, then transfer pricing provisions are applicable. Second, whatever the transaction that is happening, the transaction should be either international transaction or it should be specified domestic transaction. Then only transfer pricing provisions are applicable. Otherwise, transfer pricing provisions are not applicable. Sir, what do you mean by international transaction? International transaction definition was given in section 92B. I will discuss little later with you. So, to get transfer pricing provisions applicable, first condition is transaction should be there in between two associated enterprises, and whatever the transaction is there, the transaction should be either international transaction or specified domestic transaction. Condition 3. Such a transaction should happen at arm's length price. Should happen arm's length. Sir, what do you mean by arm's length price? How to compute arm's length price? What are various methods to compute arm's length price that we are going to discuss in section 92. So prima facie, we need to discuss three sections: 92A, 92B, 92. First, I will start with section 92B. Sir, what do you mean by international transaction? 92B, international transaction. International transaction means transaction between two or more associated enterprises. Out of them, one should be NR. Out of them, one should be NR in India. Then that transaction we call as international. What I said, let's say there is A limited, this is and there is also B limited. A limited is resident in India, B limited is also resident in India. Whatever the transaction, A limited and B limited are associated enterprises. Whatever the transaction that happens between A limited and B limited, is it international transaction? No, because to qualify as international transaction, one of the associated enterprises should be non-resident in India. Then only the transaction we call as international transaction. Another example, A limited, B limited. A limited is resident in India, B limited is non-resident in India. Both A limited and B limited are associated enterprises. Whatever the transaction between A limited and B limited is there, can we call this transaction as international transaction? Answer is, you can call this transaction as international transaction because one of the associated enterprise is non-resident in India. So transfer pricing procedures are up. There is C limited, D limited. C limited is non-resident in India, D limited is also non-resident in India. C limited, D limited both are associated enterprises. Now C limited has done transaction with D limited. Now can we call this as international transaction? Yes. See, out of associated enterprises, both are non-residents, but condition is if one company or if one person is non-resident sufficient, it will be termed as international transaction. Are you able to understand why? See, there are two non-residents. Out of two non-residents, one non-resident may be taxable in India. That is why, so even if both are non-residents, one of the non-resident can be taxable in India. That's why this transaction will be treated as international transaction. Are you able to understand? So we will come to the beginning. What I said, three conditions. When transfer pricing provisions are applicable, they are applicable only if transaction is there in between two associated enterprises. Next, such a transaction should be international transaction or specified domestic transaction. Specified domestic transaction I will discuss later. Next, if transaction is happening between associated enterprises and transaction is international transaction, then the transaction should be computed at arm's price. Okay. Now, I discussed the section 92B international transaction. What do you mean by international transaction? If transaction is happening between two or more associated enterprises, out of them one should be non-resident in India. Then the transaction we call as international transaction. We will discuss associated enterprise. 92A, associated enterprise. Sir, when can we call two entities as associated enterprises? For example, A limited is there, B limited is there. A limited holds greater than or equal to 26% shareholding in B limited. Now we can call A limited and B limited as associated enterprises. Are you able to understand? So if one company holds 26% shareholding or more than 26% shareholding in another company, then both companies will be treated as associated enterprises. Are you able to understand? Sir, this 26% shareholding, is it required to be held for the whole year? No. Even for one day, 26% shareholding is there in that particular previous year. For that year, both the companies will be treated as associated enterprises. So, this 26% shareholding at any time during the previous year. So, 26% shareholding is not required to be maintained for the whole year. This can be at any time during the previous year. Now, this 26% shareholding, whatever is there, this can be either directly or indirectly. Sir, what do you mean by this? Directly or indirectly? I will tell one example. A limited is there. Next, D limited is there. S limited is there. A limited is having 80% shareholding in D Limited. D Limited is having 90% shareholding in S Limited. That means indirectly A Limited 90 into 80%. 90 into 80%, how much? 72%. So A Limited is having 72% shareholding in S Limited. So we can tell A Limited and S Limited also as associated entities. Are you able to understand? So if one company holds 26% or more shareholding in another company, then both companies we will call as associated enterprises. The shareholding is required to be maintained not for the whole year but any time during the previous year, and this 26% stake can be held either directly or indirectly. So did you understand first case of associated enterprise? Second case, there is R Limited, there is S Limited, there is M Limited. R Limited is holding greater than or equal to 26% shareholding in S Limited. So, can we tell R Limited and S Limited as associated enterprises? Because R Limited is holding more than 26% shareholding. Same, R Limited is also holding greater than 26% shareholding in M Limited. So, we can tell R Limited and M Limited as associated enterprises. In this case, like whatever S Limited and M Limited are there, these are also treated as associated enterprises. That means if one company holds 26% or more shareholding in company 1, 26% or more shareholding in company 2, then these company 1 and company 2 are also treated as associated enterprises. Case 3. There is Kim Limited, there is a Trump Limited. Kim Limited appoints more than half of board of directors of Trump, or Kim Limited appoints one executive director of Trump Limited. Then we can tell Kim Limited and Trump Limited as associated enterprises. That means if one company appoints board of directors of another company, how many board of directors? More than half of. More than half of the board of directors. That means if majority of the board of directors are appointed by one company in another company, and or if one company appoints one executive director of another company, then we can call both the companies as associated. And are you able to understand? So this is case 3. I hope you understood case 3. Now we will move to case 4. Now AA Limited is there, BB Limited is there, CC Limited is there. Now AA Limited is like appointing more than half of board of directors of BB Limited, or AA Limited is appointing one executive director of BB. Now can we call AA Limited and BB Limited as associated enterprises? Perfect. Next. AA Limited is also appointing more than half of board of directors of CC Limited, or one executive director of CC Limited. Now we can tell AA Limited and CC Limited as associated enterprises. In this case, BB Limited and CC Limited, they are also treated as associated enterprises. Able to understand? Case 5. There is Rama Limited, there is Lakshman Limited. Lakshman Limited total borrowings are 90 crores. Rama Limited, sorry, Lakshman Limited total assets are 90 crores. Rama Limited gave 70 crores loan to Lakshman Limited. In this case, Total assets of Lakshman Limited are 90 crores. Loan given by Rama Limited is 70 crore rupees. That means whatever the loan that is given is there, loan given is more than 51%. Na? So if amount of loan given is more than 51% of total assets, then also we can treat both the entities as associated enterprise. Very simple. One company gives loan to another company. Amount of loan given should be more than 51% of total assets of another company. Then we can call both the entities as associated enterprise. Are you able to understand? Sixth case. There is Veer Limited. There is Sur Limited. Veer Limited, Sur Limited total borrowings are 200 crores. Veer Limited gave guarantee for 60 crore rupees. 60 crores means what? More than 10%. Na? 60 crores divided by 200 crores means how much percentage was guaranteed? 60 by 200 into 100. 30%. Correct? So 30% of borrowing. 30% borrowing is guaranteed by Veer Limited. So if percentage of guarantee given to another company is more than 10%, then also we can consider both the entities as associated entities. Are you able to understand? Case number 7. I hope you are following. Till case 6, I have explained you different cases of associated enterprises. Till case 6, if you are clear, give one like symbol or give that you have understood. Leave the comment. If you have any doubt, you can ask. Seventh case. There is Hero Limited. There is Honda Limited. Now, whatever the technical know-how that is required for Hero Limited, entire technical know-how is provided by Honda Limited. Simply intangibles, whatever the intangibles required for one company are provided by another company. That means Hero Limited is 100% dependent on Honda Limited for the purpose of technical know-how, for the purpose of manufacturing bikes. Entire to manufacture bikes, whatever the information that is required, entire information will be given by Honda Limited. That means entire business of one company is dependent upon technical know-how or copyright, franchise, design of another company. In this case also, we can term both the enterprises as associated enterprise. Be able to understand? Case number 8. There is Haha Limited. There is Kaka Limited. Haha Limited, Kaka Limited. Now, Haha Limited manufactures cars. For manufacturing cars, entire raw material, whatever tires, doors, windshield, everything is provided by Kaka Limited. Everything is provided by Kaka Limited. And it influences price and terms and conditions. Influences price, terms and conditions. In this case also, we can consider Haha Limited and Kaka Limited as associated enterprises. That means what? One company is manufacturing a finished good. For manufacture of that finished good, entire raw material is supplied by only one supplier, and this company is entirely dependent upon another supplier. Now another supplier is determining the price. In this case, like as this company is entirely dependent upon single supplier, that supplier is influencing the price. Now also we can determine both these companies, both these entities as associated. And are you able to understand? 9. There is Aha Limited. There is Arha Limited. Aha Limited, Arha Limited. Aha Limited sells goods to Arha Limited. Generally, who will determine selling price? Seller will determine the selling price. You wanted to buy iPhone. Okay. So will you tell I will pay only 10,000 rupees? No. Seller will determine the price. He will tell 1 lakh rupees. If he wants to give, he will give discount. Otherwise, he will not give discount. So every time selling price will be determined by seller. But if buyer determines the selling price, then like something fishy na, it is not correct. So if buyer determines selling price or if buyer influences the selling price, in that case also both will be treated as associated enterprises. AHA Limited and AHA Limited will be treated as case number 10. There is individual, Uma is there. Uma is having one company, Uma Limited. He is having one company, Uma Limited. In that Uma Limited, Uma is having more than 26% shareholding. And there is my mother. Her name is Manga. She is having one company, Manga Limited. In Manga Limited, she is having more than 26% shareholding. Now also, we can term Uma Limited and Manga Limited as associated enterprises. That means what? One person is having control, 26% or more shareholding in Uma Limited. His relative is having more than 26% or equal to 26% shareholding in another company. Okay, now both these companies, that means individuals company, relatives company, both these companies will also be treated as associated. Sir, here relative means who? Relative means spouse, brother, sister, mother, father, lineal ascendant, lineal descendant. These are considered as relatives. Here, please understand, greater than 26% shareholding, we can call this as control. We can call this as control. If one person is having control over another company and his relative is also having control over second company, then this first company and second company both are treated as associated entities. Here, control is very important. Control means control can be two types: capital control, management control. Capital control means what? More than or equal to 26% shareholding. So, control is of two types: capital control, management control. Capital control means what? Greater than or equal to 26% shareholding. Management control means like uh, power to appoint majority of board of directors or one executive director. So control can be either capital control or management control. Individual have control over another company. His relative is having control over second company. Now these two companies will be treated as associated entities. Are you able to understand? Similarly, 11th case, HUF is having control over one company, company 1, relative of HUF. Relative of HUF means nothing but member of HUF. Relative of HUF is having control over company 2. Now, both these companies will be treated as associated entities. Company 1 and company 2 will be treated as associated. This control can be either capital control or management control. Case number 12. Partnership form is there, like any person, if he has greater than or equal to 10% of profit sharing ratio in partnership form, LLP or AOP, BOI, then also both these will be treated as associated. And I will give one example. A Limited is there, ABC and Co is there. A Limited is holding, having 35% profit sharing ratio in ABC and Co. Now A Limited and ABC and Co both will be treated as associated. Able to understand? So these are 12 different cases of associated. I hope you understood what associated enterprise means. If you understand, leave the comment, sir, we understood. Okay. I hope you are finding this session interesting. We discussed what international transaction means. We discussed what associated enterprise means. Next, I am going to discuss about arm's length price. 92C, arm's length. See, to calculate arm's length price, there are 5 different methods. First one is comparable uncontrolled price method, CUP method, comparable uncontrolled price method. Second one is resale price method, second one. Third one is cost plus method. Fourth one is profit split method. Fifth one is transactional net margin method. So there are 5 methods to calculate arm's length. We will discuss one by one, then we will solve problems also so that you will get better clarity, no confusion. First, comparable uncontrolled price method. See, one company is doing transaction with associated enterprise. The same company is also doing transaction with unrelated party. Okay, so A Limited is there, B Limited is there. Both are associated enterprises. Now, A Limited is making payment. A Limited is making payment to B Limited. A Limited is also making payment to C Limited. C Limited is unrelated party. Okay. Now, whatever the payment made to unrelated party is there. See, payment made to related party, associated enterprise, it is influenced price, right? And whatever payment made to C Limited is there, it is uninfluenced price. So, we will take uninfluenced price as base. To this, we will make plus or minus. We will make adjustment of functional differences. Functional differences, we will make adjustment. After making that adjustment, whatever the price that we are going to arrive, that we call as, are able to understand, that is comparable uncontrolled price method. When one company is doing transaction with its associated enterprises and it is also doing transaction with unrelated party, then we will apply CUP method. Whatever the transaction that is done with unrelated party, that will be taken as base. Some differences, functional differences will be adjusted and we are going to arrive at arm's. So that arm's length price will be compared with actual price and income will be added. Shall we do one problem so that you will understand better? Hmm. Yeah, comparable uncontrolled price method. I hope you are having institute material with you. If you are not having institute material, I am going to share with you right now. I am sharing this in the group. I have shared it in the group. You can download also. US Limited, a US company, has a subsidiary IND Limited in India. US Limited, subsidiary means what? More than 50% stake. If it is subsidiary, both will be treated as associated enterprises. So there are two companies basically, uh, US Limited and India Limited, IND Limited. US Limited is incorporated in USA, IND is incorporated in India. Now, US Limited also sells computer monitors to CMI Limited, another computer reseller. Okay, so there is unrelated party CMI Limited. So, like IND Limited purchases computers, CMI Limited also purchases computers from US Limited. It sells 50,000 computer monitors to IND Limited at the rate of 11,000 per unit. So, what is the price that is offered? Purchase price is 11,000 per unit. How many units? 50,000. The price fixed for CMI Limited is 10,000 per unit. So, what is the price? 10,000 per unit. CMI Limited is purchasing for 10,000 rupees. However, IND Limited is purchasing for 11,000 rupees. And here both IND Limited and US Limited are associated enterprise. By this time, it is fishy. Associated enterprise, IND Limited is paying excess 1,000 rupees to US Limited. Why excess expenditure? Because if I increase my expenditure, my profit decreases and my tax also decreases. So the reason for paying extra expenditure to associated enterprise is to decrease my profits. In this case, we need to calculate transaction at arm's length price. First of all, both are associated enterprises. US is incorporated in USA, Ind Limited is incorporated in India. It is international transaction. So in case of international transaction, we need to calculate transaction at arm's length price. Well and good. Here comparable transaction is available. Whatever US company is there, it is selling to us. It is also selling to CMI Limited. So we are going to take whatever, this is uninfluenced price, right? 10,000 rupees. We will take this as base and we will do some adjustments. Thereby we are going to arrive at arm's length price. Are you able to understand? The warranty in case of sale of monitors by Ind Limited is handled by IND Limited. However, sale of monitors by CMI Limited, US Limited is responsible for warranty for 3 months. See, for outsider, he is giving warranty 3 months. However, for associated enterprise, warranty is 0 months. No warranty. Warranty was not given. So we will adjust. For unrelated party also, if warranty is not given, generally if warranty is not given, price decreases. So we will bring both of them to comparable terms. So we will adjust functional differences. So what is functional difference? For associated enterprise, no warranty. For unrelated party, warranty is given. So this is at no warranty level. This is at warranty level. Now we will bring transaction with unrelated party also at no warranty level. Then we will compare. Are you able to understand? So what is base? Always base is uninfluenced price. So base uninfluenced price, how much? Uninfluenced price is 10,000 rupees. If no warranty is given, cost will reduce. So reduction in cost if no warranty. Warranty cost is 1,000 per annum into 3 months na 3 by 12. How much? I think 250 rupees. So how much is arm's length price? Arm's length price is 9,750 rupees. That means they should pay 9,750, but actual price paid is 11,000 rupees. Now, how much excess expenditure paid? Excess expenditure paid is equal to 1,250 rupees. Are you able to understand? Excess price paid is 1,250. Whatever excess price paid, 1,250 rupees into 50,000 units. Okay, that will be added to 11,000 into 1,002. 1 crore 37 lakh. Am I correct? wait, 1250, sorry, 625 lakhs. I did calculations. I hope you understood CUP method, comparable uncontrolled price method. Now shall I move to next method, second method? Second method is resale price method. Sir, what do you mean by resale price method when it is applicable? When I purchase goods from my associated enterprise and sell these goods to outsider, unrelated party, in this case, resale price method is applicable. I will do reverse calculation. Whatever the resale price is there, that I will take as base from this normal GP margin. If I sell to outsider, how much gross profit I will maintain, that gross profit margin I will reduce, and then I will reduce like whatever the purchase related expenses are there, those purchase related expenses I will reduce, thereby I am going to arrive at arm's length price. Are you able to understand? So when you are calculating under resale price method, what is base? Base is resale price. You will take resale price as base. From that resale price, you are going to reduce GP margin. After reducing GP margin, then you will reduce or add purchase related expenses or functional differences. After doing these adjustments, whatever that you arrive at, that we call as able to understand. So when resale price method is applicable, you are purchasing from associated enterprise and selling to unrelated party. Then resale price method is applicable. You will consider resale price as base. You will reduce your normal GP margin. You will do adjustments for functional differences or purchase related expenditure. Then you are going to arrive at price. Are you able to understand? Shall we do one problem? Earth Private Limited. I hope you are following. Now, Earth Private Limited, Kolkata is engaged in trading of electronic goods. It purchased goods from its associated enterprise Sun Pte Limited, Singapore, and also purchased from unrelated party Oceania Limited, UK. So, there is one company, Earth Private Limited. There is Sun Pte Limited and there is Oceania Limited. Earth Private Limited and Sun Pte Limited both are associated enterprise. Oceania Limited is unrelated party. Now what's happening? Earth Private Limited is purchasing from Sun Pte Limited. For financial year 24-25, GP margin was 15% on sale of goods of Sun Pte Limited and 20% in case of Oceania Limited. So it is purchasing and reselling na. So at the time of resale, what is GP margin? 15%. But whenever Oceania goods are resold, then GP margin is 20%. That means what? For outsider, we are adding 20% profit. For associated enterprise, we are adding only 15% and are selling to outsider. Here, what is influenced? Whatever the margin with associated enterprise is there, that is influenced. So we do not consider this. Whatever the uninfluenced margin is there, that means if he is doing with outsider, whatever the margin that he is leaving 20%, this is like uninfluenced margin. So we will consider 20%. Are you able to understand? After sales warranty of 6 months was provided by Sun Pte Limited, whereas Oceania Limited gave after sales warranty of 1 year. So Oceania gave after sales warranty of 1 second. So our associated enterprise is providing how many months warranty? It is providing 6 months warranty. However, unrelated person is providing 1 year warranty. So we need to bring it comparable terms. We need to adjust the functional difference. The cost of warranty may be taken as 2% of sale price. Sun PTE Limited brand value is internationally known and the benefit of brand value can be taken as 1% of sale price. So Sun PTE, it is renowned, but Oceania Limited is not known. You know, right? Whenever brand is higher, they will charge price for their goodwill. Apple charges so much of price for its goodwill, still customers will pay. Okay, now we need to bring both of them at comparable terms. Then we need to do the calculation of arm's length price. During financial year 24-25, it sold goods of Sun PTE Limited 20 crores, Oceania Limited 15 crores. So 15 crores goods are sold, 20 crores goods are sold. When resale price method is applicable, when you purchase goods from associated enterprise and sold to outsider, how much is sold to outsider? Like goods purchased from associated enterprise and sold to outsider is 20 crore rupees. So we will take 20 crore rupees. I will draw one P&L account. Through this, I am going to explain. So how much associated enterprises goods are sold? 20 crore rupees. Actually, GP margin is 15%. But ideally, how, like if it is doing transaction with outsider, how much GP margin is there? 20% GP margin is there. So we will consider 20% GP margin. How much? 20 into 20%, 4 crores. See, if you compare Sun and Oceania, Sun is providing only 6 months warranty, Oceania is providing 12 months warranty. Okay, now if Sun also provides another 6 months warranty, our cost increases na. Whatever the increase in cost that would have been there, that cost we need to add. That means we need to debit. So cost of additional 6 months warranty. How much? 20 crores into 2%. This 2% is per annum. We want only for 6 months into 6 by 12. How much? 20 lakh rupees. Next. Sun Limited is renowned. Oceania Limited is not known. If Sun Limited is not known, if and we need to bring both of them at comparable terms. For example, if Sun Limited is also not known, then we need not pay extra 1%, right? There will be decrease in price. So there will be decrease in price by 1%. Am I correct or not? So whatever decrease in price is there, that is the benefit. So that we need to credit it to P&L account. Reduction in price. If you do the transaction with unrelated party compared with Sun PTE Limited, there will be decrease in price by 1% because Sun PTE Limited is charging for goodwill. How much it will be? Again, 20 crores into 1%, 20 lakh rupees. So how much is the expenditure payable? Expenditure payable, which is nothing but arm's length price, that is balancing figure. That arm's length price is balancing figure. How much? 16 crore. So arm's length price is 16 crore rupees. Did you understand? That is the calculation with regard to second method, resale price method. Next, cost plus method. I hope you understood resale price method. Tell me that you have understood resale price. ALP means arm's length price. I hope you have taken coaching previously. cost plus method. See, we are not doing transaction with anybody. We are doing transaction. There is software company in USA. There is software company in India. We do backup services. We provide backup services to software company in USA. We do not do transaction with any other person. So when we do transaction only with associated enterprise, then at what price we will sell, that there is no unrelated party to compare this transaction with another. There is software company US Limited and there is software company India Limited. India Limited only do backup service to US Limited. Now, India Limited is not doing transaction with any other person. So, in this case, whatever the billing, whatever the sale price that it has done, that we cannot compare with another person. So this is influenced. Sale price is influenced. See, they can influence price, but they cannot influence cost. If they reduce cost, it is up to them. Okay, it is loss to them. If they reduce their cost, it will be loss to them. So uninfluenced is cost. So we will take cost as base, direct cost, indirect cost. Then to this we are going to add GP margin. By adding GP margin, we are going to arrive at arm's length price. Are you able to understand? But sir, how do we get GP margin? Here, India Limited is doing only transaction with US Limited. It is not doing transaction with any other company. If the same type of another company in the industry, if another company in the industry also provides same type of services to its holding company in USA, whatever the GP margin it charges, that GP margin we are going to take as base for the purpose of calculation of arm's length price. Are you able to understand? Now, shall we do one problem on this? Another important point, while calculating GP margin, if there are any functional differences, they will be adjusted. After adjusting functional differences, then we are going to arrive at right GP. Okay. ABC Limited, Canada holds 35% shares in LMN Limited, India. LMN Limited develops software and does both on-site and off-site consultancy services for the customer. So there is ABC Limited, LMN Limited, LMN Limited. Now ABC Limited is holding 35% stake. So can we call both as associated enterprises? Yes, we can call both as associated enterprises. LMN Limited. So LMN Limited is providing services to ABC Limited. Am I correct or not? Now LMN Limited during the year billed ABC Limited Canada for 120 man hours at the rate of 1800 per man hour. So what is sale value or what is service value? 1800 per man hour into 120 man hours. So how much is billing value? 1800 into 120 rupees, 2,60,000 rupees. What is the cost of execution? Cost of execution is 2,25,000. However, LMN Limited billed XYZ Limited India at the rate of 2,800 per man hour for the similar level of manpower and earned GP margin of 50% on its cost. So, what LMN Limited is doing? LMN Limited for outsider. For outsider, how much was billed? For outsider, 2,800 per man hour was billed. And how much is GP margin? GP margin is 50% on cost. So how do we calculate arm's length price? With associated enterprise, whatever the sale value is there, this is influenced. As sale price is influenced, we do not consider this sale value. What we will do, we will take cost. For this cost, whatever this GP margin is there, that GP margin will be added, and thereby we are going to calculate arm's length price. Are you able to understand? Now, how much is GP margin? 50%. For this 50%, we need to do functional adjustment. What is that functional difference adjustment? The transaction of LMN Limited with ABC Limited and XYZ Limited are comparable subject to following difference. While LMN Limited derives technology support from ABC Limited, there is no such support from XYZ Limited. The value of technology support received from ABC Limited may be put at 18% of normal gross profit. See, normally from ABC, it is going to get some support. But from outsider, no support was received. If no support is received from outsider, we need to increase the cost. We need to recruit and we need to increase the expenditure. Whenever our expenditure increases, our profit margin also decreases. So generally, let us write P&L. How much is our, like, for with unrelated party, how much is our GP margin? GP margin is 50% on cost. 50% on cost. But from unrelated party, we do not get any support. If we do not get any support, we need to incur the expenditure. So how much is cost of support expenditure? Cost of support 18%. 50 into 18%, 9%. That we need to. As ABC Limited gives business in large volumes, LMN Limited offered ABC Limited a quantity discount which may be valued at 10% of normal gross profits. See, ABC Limited is providing huge volume, unrelated nominal volume. If huge volume is provided, then obviously more discount will be given, right? When we give more discount, our profit will decrease. So basically our profit is 50%. From that profit, we are incurring expenditure. If expenditure increases, support expenditure. So if expenditure increases, our profit decreases. As profit decreases, we need to reduce 9%. Similarly, when we give huge discount is also expenditure, right? Whenever we give discount is expenditure. Whenever discount is given, our expenditure increases, profit decreases. So how much is discount given? 10%. 50 into 10%, 5% is required to be reduced. Next, third functional difference. In case of rendering services to ABC Limited, LMN Limited neither runs any risk nor incurs any marketing cost. On the other hand, in case of services to XYZ Limited, marketing cost is 12%. That's what. If I want to sell to my parents, I can sell easily. If I want to sell to outsider, that is difficult. Like I am teaching direct taxation. If I wanted to sell to my brother, okay, he already knows I will teach direct taxation. He will purchase. But if I want to sell this to you, you should know me, na. That is the bigger task now. Even though, like, I should reach to maximum people. That's the criteria now. So then only people will buy course from me. So whenever you are doing transaction with outsiders, you need to incur lot of marketing cost. Okay. So whatever the marketing cost is there, that is also expenditure. If expenditure increases, profit decreases. So 12%, 50 into 12% means 6% that you will reduce. So how much is ideal GP margin? Ideal GP margin for transaction with outsider. That means when you do transaction with outsider, your GP margin will be 50 minus 9 minus 5 minus 6. Your GP margin will be 30%. Am I correct? Yeah, another difference was also there. LMN Limited offered 1 month credit to ABC Limited. Cost of providing such credit may be valued at 2% of gross profit. No such credit was given to XYZ. What is this? LMN Limited for ABC Limited gave credit period of 9 days. Sorry, credit period of 90 days. For outsider, no credit period was given. As no credit period was given, if credit period was not given, our price, like our cost, our expenditure decreases. Correct? So that we need to add. So credit period not given, then our expenditure decreases. In that case, profit increases. 50 into how much it was? 2% of gross profits. Two into 50%, 1%. That is required to be. So ideal GP margin will be 31. So we know the cost, right? We know the cost. Cost is 2,25,000. So for this cost, we need to add GP margin. Thereby, we are going to arrive at 2,25,000 into 31%. 2,94,000. That is arm's length. That will be compared with actual bill 2,16,000. How much is under billing? Under billing is 78,750. That will be added to the. Are you able to understand? Next method is profit split method. Sir, in case of profit split method, we are going to divide the profits between associated enterprises based on the functional risk assumed and the extent of work performed. See, what we will do, let's say transaction is like we will take total bill value, we will take total cost. Whatever the total profit is there, that profit will be split. This profit will be split between two or more associated enterprises. Thereby, we are going to arrive at arm's length price. Let's say like A Limited, B Limited, C Limited is there. A Limited bill value, like let's say cost is 80,000 rupees, profit 20,000, bill value 1 lakh rupees. But total cost, for example, let's say total cost is 10 lakh rupees. Sorry, total bill value is 10 lakh rupees. Total cost is 9 lakh rupees. Then how much is profit? Profit is 1 lakh rupees. But A Limited contributed for 20% of risk. That means whatever the risk that is there in the contract, 20% of risk and 20% of the work was done by A Limited. Now what we will do? We will take A Limited cost 80,000 rupees. So A Limited bond 20% of risk, right? Now profit will be, okay, hold on. A Limited has bond 35% of risk. Now what we will do? 1 lakh into 35%, 35,000 we will add and arm's length price will be 1,15,000 rupees. Are you able to understand? For example, let's say the risk was assumed in the ratio of 35 is to 30 is to 35%. Now, what is the ratio of risk? 35%. Na? So, normal GP that will not be considered. Whatever its profit share is there based on risk, that will be considered in calculation of price. That is profit split method. Last one is TNMM, transactional net margin method. See, in case of TNMM, transactional net margin method, cost plus method, we will consider gross profit. In transactional net margin method, we will consider net profit of similar companies. Let's say I am into manufacturing of medicines. The same manufacturing company of medicines. Let's say I am Reddy Labs. There is Sun Pharma. How much Sun Pharma is charging when it is doing transaction with its associated enterprise? What is the net profit margin? That net profit margin I will consider in calculation of arm's length price. That method we call as transactional net margin method. Are you able to understand? So transactional net margin method, you please try to do this problem. It is easy only. If you have any doubt, you can ask me in the Telegram group. Okay. So this is all about computation of arm's length price. So we discussed about international transaction, associated enterprise, 5 different methods of computation of arm's length price. We also have done 3 problems on this. With this, I hope you got clarity about calculation of arm's. Next, we will move ahead. We will discuss advanced concepts. Sir, there are 4 arm's length prices available. Let's say arm's length price 1 800 rupees, arm's length price 2 750 rupees, arm's length price 3 600 rupees, arm's length price 4 870 rupees. So up to 5 arm's length prices if are available, then what you will do? You will do average. How to calculate average? 800 plus 750 plus 600 plus 870. Okay, 3020 divided by 4. How much? 755 is our average price. Able to understand? So if you like, there is possibility na you can calculate multiple arm's length prices. So if more than one arm's length price is available and up to 5 arm length prices are available, then what you will do? You will calculate average arm length price, and this average arm length price is final. Okay, this is, sir, what if more than 5 arm length prices are available? If more than 5 arm length prices are available, then in that case range concept is. Sir, what is range concept? Let's say I am having 6 to 7 arm length prices. 100, 110, 120, 125, 128, 130, 135, 140, 142. So how many? 1, 2, 3, 4, 5, 6, 7, 8, 9. So here I have more than 5 arms length prices. Now what I will take? I will take 35th percentile. 35th percentile. That means 9 into 35%. How much? 9 into 35%. It is 3.15. 3.15 is not a whole number. It is not a whole number. So you will consider next number. Next number means you will consider 4. So what is 4? This 125. This is lower limit. Next, you will take 65 percentile. 65, 9 into 65%. How much? 9 into 65%. 5.85. 5.85 is also not a whole number. You will consider next one. Next one is 6. So what is sixth number? 130. This is upper limit. So if your transaction price is in between 125 to 130, that means if your transaction price is in the range of 125 to 130, then that price will be considered as arm's length price. If your transaction price is not in the range of 125 to 130, listen, your transaction price is within the range. then no adjustment is required. No adjustment is required. If your actual price is 140 rupees, it is not within the range, right? Not within range. Then what you need to consider? You need to consider, as it is not within the range, then arm's length price is equal to 50 percentile. 50 percentile means 9 into 50%, which is 4.5. 4.5 is not a whole number. So you will consider next. Next is 5. So how much is 5? 5 is 128. 128 will be considered as price. Able to understand? So this is the concept relating to range. Here another thing is there. Here, sir, what if in this case, if it is a whole number? For example, here it is not 3.15, it is 3. 3 is whole number, na? Then will you consider 120? You should not consider 120. If you get whole number, if you get whole number for lower limit or upper limit or for 50 percentile, then what you need to consider, that whole number plus next number divided by 2. You need to consider this average as lower limit or upper limit or 50th percentile. For example, here for suppose 35th percentile is 3. Then what you will do? You will take third one, you will take fourth one, 120 plus 125 divided by 2. How much? 122.5, I think. Yeah, 122.5 will be considered as lower limit. So when you are calculating 35th percentile or 65th percentile or 50th percentile, if you get whole number, don't take whole number. Whole number plus next number divided by 2. That average you need to consider as lower limit or upper limit or 50th percentile. Okay, that is range concept. Now up to 3% tolerance band is available. Sir, what do you mean by 3% tolerance band? If arm's length price is greater than 103% of actual price, then arm's length price will be taken as final. However, if arm's length price is less than or equal to 103% of actual price, then actual price will be considered as. That means what? See, how can actual transaction price and arm's length price, how can both the same? Both will be the same. There will be some difference, na? So that is why actual transaction price, arm's length price. In between these two, if there is a difference up to 3%, then it will not be considered, it will be ignored. If difference is more than 3%, then arm's length price will be considered. Are you able to understand? But if you are in wholesale business, instead of 3%, 1% will be considered. Is it clear? Section 92C3. Generally, SSE is required to calculate arm's length price. That means on suo motu basis, on self-assessment basis, SSE himself is required to calculate arm's length price. But there are 4 cases. In these 4 cases, arm's length price will be calculated by assessing officer. Arm's length price will be calculated by AO. Sir, what are those 4 cases? Case 1, AO feels you did not follow most appropriate method. appropriate. See, there are five methods. I followed comparable uncontrolled price method. Assessing officer came. He is saying in this transaction you should not follow cup method, but you need to follow transactional net margin method. So I followed one method. Assessing officer is feeling like transactional net margin method is required to be followed. So when there is difference of opinion in calculation method, in that case, assessing officer will calculate the arm's length price. Next. Second case, AO feels data used for calculation of arm's length price is not correct. What do you mean by this? Let's say I calculated one arm's length price. To calculate the arm's length price, I considered only one company, Sun Pharma Limited. Assessing officer is saying there are 200 companies available. Why you take only one company? Assessing officer feels that at least 20 companies should be taken. So whenever assessing officer feels the data that I used in calculation of arm's length price is not correct, then assessing officer himself will calculate the arm's length price. Next, third case. If assessing officer feels that documentation is not prepared as per section 92D. Generally, documentation is required to be prepared as per section 92D. Otherwise, 2% of transaction value penalty will be levied. So there is section 92D. It will tell what are the documentation that is required to be maintained. If such documentation is not maintained, assessing officer will calculate the price. Next. Assessing officer will ask information from SSE. If SSE fails to submit information, info to assessing officer. In that case also arm's length price like will be calculated by S. Okay. Next. Next we discuss advance pricing agreement. So much important APA. Very, very, very important. I want everyone's attention. If you are feeling drowsy after doing this much of lengthy class, calculation and all, wake up or wash your face and come, because advance pricing agreement very, very important. Question can be asked. Appa. Shall we discuss Appa? Please comment yes. Are you alive or you kept your mobile phone in front of you and sleeping? Now, see, in transfer pricing, there is more chance for litigation. I will follow cup method, then assessing officer will tell you should not follow cup, you should follow transactional method. Or I will take five companies for calculation of arm's length price. Assessing officer will come and tell no, no, not five companies. You should take eight companies to calculate arm's length price. There is so much of litigation that is there in case of transfer pricing. So to counter this litigation, like central government came up with one concept that is called as advance pricing agreement. Sir, what advance pricing agreement means? Like CBDT and SSC both will sit on one table and they will finalize arm's length price, like arm length price computation method, and how arm's length price is calculated with how many companies as base and what is the data that will be used for calculation of. Once they come to an agreement, then there is less scope for dispute. Now, if there is no agreement, we do not know what department will follow to calculate the arm's length price. We do not know how many companies data that department will take to compute the arm's length price. So ambiguity is there, confusion is there, there is no certainty. When there is no certainty, there is more scope for litigation. So that is why CBDT, after taking approval of central government, CBDT will enter into agreement with the SSC. Both of them will come together and they will discuss what is the transaction, what are all the activities that are done by the SSC. Based on that, both will come to one agreement. What is the method followed for computation of arm's length price and how that arm's length price will be computed. Once this method is finalized, then there is no litigation. Now, complete clarity is there. I know what department follows for calculation of arm's length price. I know how department calculates the arm's length price. So there is certainty. For this certainty, SSC will enter into advance pricing agreement with CBDT. Okay, sir. Whatever this agreement is there, is this binding on department? Yes. Is it binding on department? Yes, it is binding on department till CIT or PCIT level. That means whatever the terms and conditions of agreement are there, those terms and conditions are also required to be followed by commissioner and commissioner. Okay, whatever the agreement is there, it is applicable to SSC, it is also applicable to the department till the level of CIT or PCIT. Able to understand? Now you will get so many doubts. Sir, for how many years we can enter into advance pricing agreement? Are we required to pay any fees? Yes, you are required to pay fees if you want to enter into advance pricing agreement. Generally, the year in which you wanted to enter into advance pricing agreement, before starting of that year only, you should make application for APA, advance pricing agreement. For example, let's say I want to enter into advance pricing agreement for previous year 24-25. In 24-25, if I make application, I cannot enter into advance pricing agreement. I should make application before 24-25 only. Let's say I made application on 25th February 2024. So it is in previous year 23-24, right? In 23-24, I made application for advance pricing agreement from 24-25 onwards. Are you able to understand? So if I make, sir, for how many years I can make advance pricing agreement? I can make application for advance pricing agreement for 2 years, 3 years, 4 years, like that. But maximum advance pricing agreement I can make is for 5 years. Okay. Generally, every person will make application for 5 years advance pricing agreement. Sir, why, sir? Because advance pricing agreement itself will take 1 year, 2 years. If you enter only for 2 years, by the time agreement is entered into, already the 2 years will be over. So you cannot do anything. So in general cases, everybody will enter into APA for 5 years, advance pricing agreement for 5 years. So let's say I made application for 24-25, 25-26, 26-27, 27-28, 28-29, 5 years. See, for these 5 years, I made application for APA. Sir, can I also make application for already completed years, already earlier years? Yes. You can make application for advance pricing agreement for earlier years also. For how many earlier years I can apply for APA? Maximum I can apply for 4 earlier years. So that if I make application for advance pricing agreement for earlier years, then that concept we call as rollback provisions. Are you able to understand? So here, if I want, I can make application for completed years also. But for 4, if I want to make application for completed years, I should mandatorily apply for 4 years. See, APA, my wish, I can apply for 1 year, 2 year, 3 year, 4 year. But if you want to apply for rollback provisions, you need to mandatorily apply for 4 years rollback provisions with fees of 5 lakh rupees. So I will apply for rollback provisions also. I will pay 5 lakh rupees. For how many years rollback provisions are applicable? For 4 years. So previous year 23-24, 23-24, 22-23, 21-22, 20-21. For these 4 years also, I can apply this we call as rollback provision with fees of 5 lakh rupees. I hope you are following. Kindly bear with me as there is no one-to-one connection. I'm expecting comments from you. Sir, that means effectively APPA is applicable for 9 years. Am I correct? So for 5 years plus rollback 4 years. Next. Sir, I wanted to apply only for APPA 5 years. Can I apply? Can I apply? Yes. I wanted to apply for APPA and rollback total 9 years. Can I apply? Yes, you can apply. Sir, I wanted to apply only for rollback. Can apply? No, not possible. Okay. See, marriage is mandatory. Children are optional. Appa is mandatory. Rollback is optional. Okay. We don't want marriage. We want only children. Not correct. Okay. We don't want appa. We want only rollback. Not possible. Okay. Simple logic. So if you want rollback, mandatorily you should enter into APPA. Along with APPA, you can also enter into rollback provision. Are you able to understand? See, when I made application on 28th February 2024. Now, company that CBDT, both will have so many negotiations, both will sit and they will discuss what the thing and all. So they came to APPA agreement entered on 4th December 2026. By 4th December 2026, already like previous year 2021 to previous year 25-26 ITRs are filed. Correct? Already these ITRs are filed by me. So whatever this period is there, previous year 2021 to previous year 2025, 25-26, these returns are already filed now by the time I enter into APPA. So from 2021 to 25-26, I followed comparable uncontrolled price method. In APPA, what is agreed is transactional net margin method. But how I already filed return based on APPA, na? I already filed based on comparable uncontrolled price method. Now as per APPA, I need to file return based on transactional net margin method. What I will do, as already returns were already filed, now I am going to file modified return for previous year 2021 to previous year 25-26 within 3 months from end of month in which I entered into APPA. From end of month in which I entered into APPA. Are you able to understand? So no problem at all. Like by the time APPA was entered, advance pricing agreement was entered. If already earlier years returns were filed, now we will modify those returns within 3 months from end of the month in which advance pricing agreement was entered into. Are you able to understand? Now, for these years, ITRs were not filed, na? ITRs not filed. For those 3 years, while calculating arm's length price, I will follow transactional net margin method only as agreed as per advance pricing. See, for these 6 years, ITR was already filed na for these 6 years. For 23-24, scrutiny 143 assessment is over. As 143 assessment is over, now they will do modified assessment as per transactional net margin method. For 24-25, assessment is pending. If assessment is pending, then they will do assessment as per APA, advance pricing agreement, based on transactional net margin method. For any previous year, if any IT8 order is passed, if IT8 order is passed, it is conclusive, na, it is already final. As IT8 order is already passed, they will not touch even though advance pricing agreement was entered into. Are you able to understand? Next, because of APPA, if your returned income decreases or if your returned loss increases, then advance pricing provisions are not applicable. That means what? Advance pricing agreement provisions are not. Now you will get doubt. Then why will he enter into APPA, sir? The reason he enters into APPA is his income will be reduced or his losses will be increased. But they should not be increased beyond, returned income should not be decreased beyond returned income as well as returned loss. See, I will tell you one example. ITR income 80 lakhs. Assessing officer will do assessment na 143 scrutiny assessment. As per scrutiny assessment, assessed income is 140 lakhs. APPA is 110 lakhs. Now, SSE will enter into APPA so that he is not required to pay tax on 140 lakhs. At least he will pay tax on 110 lakhs. That means what? By advance pricing agreement, your income can be less than assessed income, but your income should not be less than returned income. Are you able to understand? So that is the concept. Why APPA is entered into to reduce their income from assessed income, but they cannot reduce their income below returned income by entering into advance pricing agreement. So by entering into APPA, if their APPA income is less than returned income, then APPA is not applicable. If advance pricing agreement income is less than assessed income, in that case advance pricing agreement is applicable. Are you able to understand? So this is the concept relating to advance pricing agreement and rollback. I hope you understood APPA and rollback provisions. Now I am going to discuss with you secondary adjustment. So till advance pricing agreement, I hope you are clear. If you are clear, please say yes. Now we are going to discuss secondary adjustment. So everybody, are you clear with regard to APPA and rollback provisions? Very, very important concept for your exam. A question is expected. APPA and rollback provisions. Secondary adjustment is also important, which I will explain. So shall I start explaining secondary adjustment? Everybody. Next, secondary adjustment. Before we discuss secondary adjustment, first let us discuss what primary adjustment. If you understand primary adjustment, secondary adjustment you will easily understand. There are two companies, A Limited and B Limited. A Limited is incorporated in India, B Limited is incorporated in USA. Now, A Limited paid 15 lakh rupees for expense. Arm's length price is only 10 lakhs. Okay. Now, how much excess paid? Excess paid is 5 lakh rupees. Now, so this 5 lakh rupees will be added to income of S. Let's speak in terms of crores because 15 crores, 10 crores, excess price paid 5 crores. Now 5 crores will be added to income of the SSC. Whatever this 5 crores is there, this we call as primary adjustment. So when you compare it with arm's length price, whatever the increase in income is there, increase in income will be considered as primary adjustment. Till here, you have no doubt, right? You are very much clear. Our finance minister, Nirmala Sitharaman, she said, sir, 5 crores income was added. You paid excess 5 crores to your associated enterprise, na? Actually, you need to pay 10 crores. But how much you paid? You paid 15 crore rupees. You paid excess 5 crore rupees to associated enterprise, na? Bring back that 5 crore rupees from your associated enterprise because you are paying 5 crores in dollars. For example, there is foreign currency outflow. Because of foreign currency outflow, Indian rupee value is decreasing. So Nirmala Sitharaman asked to bring back those 5 crore rupees excess payment within 90 days. Are you able to understand? So SSC should bring back 90 crores from associated enterprise. Sorry, 5 crores from associated enterprise within 90 days. Sir, what if he do not bring back? If he do not bring back, then 5 crores will be deemed as loan given to associated enterprise. Loan given to. So the thing is, you intentionally paid 5 crore rupees access to your associated enterprise. Now bring back that 5 crore rupees. If you do not bring back, we will deem you have given 5 crores loan to your associated enterprise, and on that 5 crore rupees, every year interest income will be added to total income of SSC till he bring backs. If he brings back after 80 years, for all 8 years, every year interest income will be calculated and that interest income will be added to the total income of the SSC, and on that interest income, every year he is required to pay tax for next 8 years. So observe how much strict she is. Okay, so whatever primary adjustment amount is there, that you should bring back to India within 90 days. If you do not bring back that money, whatever that amount is there, that will be deemed as loan given to your associated enterprise, and whatever the deemed loan is there, on this deemed loan, there she is going to charge interest income. Whatever that interest income that will be charged every year is there, that will be called as secondary. Are you able to understand? So you have one option, like you unfortunately paid extra. Now bring back that extra within 90 days. If you fail to bring back that extra within 90 days, then whatever the amount that you have paid is there, that will be deemed as loan given, and on that loan given, you are like every year interest income will be added. Sir, what is the rate of interest? I will tell you. Okay. So did you understand what essentially secondary adjustment means? See, whatever secondary adjustment is there, secondary adjustment is done only if primary adjustment is more than 1 crore. If primary adjustment is less than 1 crore, na, it is bacha. On that, secondary adjustment will not be done. Similarly, if primary adjustment is relating to is for assessment year 16, 17 or earlier years, then this secondary adjustment concept is not. Secondary adjustment concept was introduced in 2016. Okay, so that's why up to 2016, if there are any primary adjustments, you do not know the provision, secondary adjustment concept is not applicable. But from assessment year 16, 17 onwards, from 1st April 2016, like 15 onwards, yeah, secondary adjustment concept came in 2015. So from assessment year 16, 17, that means from for assessment year 16, 17 or earlier years, if you have done primary adjustment, then secondary adjustment concept is not applicable. After assessment year 16, 17 only, secondary adjustment concept is applicable. Are you able to understand? What is the interest rate? Interest rate is if transaction denominated in Indian currency. If transaction is denominated in Indian currency, then rate of interest rate is SBI 1 year marginal cost of lending rate as on 1st April of previous year. If transaction is denominated in foreign currency, transaction denominated in foreign currency, then you will consider LIBOR. You know LIBOR, right? London Interbank Exchange Rate. You will consider 6-month LIBOR as on 30th September of previous year plus 3%. Here it is plus 3.25. Now, I said whatever the primary adjustment is there, that should be brought into India within 90 days. Now, sir, how you will calculate that 90 days? Basically, secondary adjustment concept, secondary adjustment. This concept is applicable only in 5 cases. What are those 5 cases? Case 1, on suo moto basis if primary adjustment is done. That means what? SSC himself disclosed arm's length price is 15 crores. He himself said extra 5 crores is paid. Then he should bring back 5 crore rupees within 90 days from due date. Okay? 90 days from ITR due date. Second case, assessing officer has done primary adjustment which is accepted by SSC. That means assessing officer increased income from 10 crores to 15 crores. SSC did not file any appeal. SSC did not object. SSC accepted increase of income of 5 crore rupees. In that case, SSC is required to bring extra 5 crore rupees within 90 days from date of assessment order. 90 days from assessment order. Next, case 3. If primary adjustment is due to safe harbor rules, safe harbor rules, then that primary adjustment amount is required to be brought within 90 days from ITR due date. Similarly, if primary adjustment is because of mutual agreement procedure, see in DTAA, certain lapses will be there. On certain incomes, there is no DTAA. So after entering into DTAA, whatever the uncovered items in DTAA are there, for those uncovered items, both countries will enter into mutual agreement procedure. So if primary adjustment is because of mutual agreement procedure, then whatever the extra primary adjustment is there, that should be brought into India within 90 days from date of agreement, from date of effect of mutual agreement, date of effect mutual agreement. Next, fifth case, primary adjustment is due to APA, due to advance pricing. If primary adjustment is due to advance pricing agreement and advance pricing agreement is entered before ITR due date, before ITR due date, then whatever that excess primary adjustment is there, excess amount, that should be brought to India within 90 days from actual ITR filing date. If APA entered after ITR due date, then you need to bring within 90 days from end of month in which APA is entered. I will explain you this, don't worry. What do you mean by this? See, APA was entered on 4th December 2026. By 4th December 2026, already these returns were filed, na? ITRs were already filed. So, for these years, if there is any primary adjustment, that primary adjustment is brought to India within 90 days from end of month in which APA is entered. APA entered on 4th December 2026. What is end of month? 31st December 2026. From 31st December 26, 90 days means January 31, February 28, March 31, 90 days. So on or before 31st March 2027, they need to bring back that excess money to India within 90 days from end of month in which APA is entered. And for these 3 years, ITR not filed, na? So for these 3 years, if there is any primary adjustment, that primary adjustment is to be brought to India within 90 days from ITR filing date. Are you able to understand? So that is the concept. So till here, are you clear? Are you able to understand the secondary adjustment? Next, sir, I gave 15 crore rupees. I need to give 10 crore rupees. But my associated enterprise is not giving me back 5 crore rupees. Now what to do? Every year Nirmalamma is adding interest on 5 crore rupees. Is there any other option possible? Yes, there is option possible. If you don't want to bring 5 crore rupees to India, you should pay one time tax. Are you able to understand? So you have two options. Option 1, like bring back to India in 90 days. Okay, that is option 1. Else, interest on deemed loan till you bring back that money to India. That is option 1. Option 2, pay one time tax. How much is that one time tax? That one time tax is 18% plus 12% surcharge plus 4% HEC. So this 12% surcharge and 4% HEC always you need to apply. That means how much is effective tax rate? Effective tax rate is 18 plus 12% plus 4%, 20.9664. Are you able to understand? So this is the effective tax rate. So either you bring back that excess money to India within 90 days. If you do not bring back, it will be deemed as loan. On the deemed loan, every year interest income will be added till you bring back that money. That is option 1. Option 2, pay one time tax. You paid one time tax after 3 years. For 3 years, interest income will be added. The day on which you paid one time tax, after that interest will not be able to understand. So this is the concept of secondary adjustment. I hope you thoroughly understood secondary adjustment. Next, there is another important concept, section 94. Shall I explain section 94B? Limitation on interest deduction. This is also very, very important. Many times it will be asked in the exam. This time it is expected. So please listen carefully. When you pay interest to associated enterprise, total interest will not be allowed as, let's say there is Modi Limited, there is Trump Limited, both are associated enterprises. Now, Modi Limited took loan from Trump Limited. On this loan, Modi Limited will pay interest na. Whatever the interest paid, total interest is not allowed as deduction. Sir, then how much is the maximum interest allowed? Maximum interest allowed as deduction is equal to actual interest to associated enterprise or 30% of EBITDA, earnings before interest, tax, depreciation and amortization, whichever is. Only this much expenditure will be allowed. Whatever the excess expenditure is there, that will be disallowed. That is not allowed as deduction. I will take one example. Let's say EBITDA is 200 crores. Okay. Interest to associated enterprise is 80 crores. How much interest was paid? 80 crores. Interest to associated enterprise 80 crores, or how much is 30% of 200 crores? 200 crores into 30%, 60 crores. Whichever is lower means only 60 crores is allowed as deduction. Whatever the balance 20 crores is there, that 20 crores will be able to understand. So when you take loan from your associated enterprise, on that loan you are required to pay interest. Total interest is not allowed as deduction. Actual interest or 30% of EBI TDA, whichever is lower, is allowed as. Okay. Modi Limited is very clever. Okay. So what Modi Limited did? Modi Limited, there is a Trump Limited. Both are associated enterprises. If Modi Limited directly takes loan, if it is taking loan, then if it takes loan directly, then 94B gets attracted, na 94B. So it will not take loan directly. What it will do? It will take loan indirectly. Trump Limited will do fixed deposit in HSBC Bank. Fixed deposit of 80 crores. Now HSBC Bank will give loan of 80 crore rupees to Modi Limited. Are you able to understand? Now in this case also section 94B is applicable. That means if associated enterprise indirectly gives loan to company in India, then also 94B provisions are applicable. Are you able to understand? See, if directly given, then obviously 94B provisions are applicable not only directly, but if indirectly given, then also 94B provisions are applicable. Able to understand? So careful. Or let's say same transaction. Same transaction. I will make some changes. Modi Limited did not give fixed deposit. Trump Limited did not give fixed deposit. Trump Limited gave guarantee. Whatever the loan 80 crores that is taken is there, on this guarantee was given. Even if guarantee is given, then also 94B provisions are applicable. Total interest paid to HSBC is not allowed. Interest paid to HSBC or 30% of EBI TDA, whichever is lower, will be allowed as. So this is the concept relating to transfer pricing. Please do the problems also. After you finish doing the problems, if you get any doubt, please ask me in Telegram group. I hope you are enjoying this session. Thank you very much. Thank you so much. Uh, Two people are there till the end. I thank you both. If you feel this session is useful, please share with your, that will be helpful.